Gentlemen, in another 1 minute, we are going live. So be.
Manil is okay.
Yeah.
Where's Manil?
Manil, hi.
I'm Manil.
1 minute, we are going live. So everybody, keep your glasses aside, put your nice smiley face, and let's get on with it.
All right, Ruwan. Thank you.
Wish you all the best again.
Thank you, Ruwan. Thank you.
We just went live.
No, it's Facebook. You're going live, huh? Facebook.
Greetings and welcome. So this is another International Chamber of Commerce Sri Lanka event. I'm saying another because there have been several that have been conducted in this manner in these past months, and all of them have had to do with this rather strange occurrence that everyone seems to need to grapple with wherever they are on the planet. So it's good to be able to focus on something, on this occasion, financial systems. Or is it one financial system, a singular? Well, that's something that will come up in the discussion. But the expression or the phrase bounce back has often been used in the past, and we've seen that it has been possible to bounce back, and there has been this resilience that has been evident in the financial system that has prevailed thus far. We've had, in 2008, certain anxieties that cropped up with the financial crisis. That's now quite a while back. And even before that, I seem to remember around 1998 or so, there was an anxiety that came up with what was called the Asian financial crisis. And I remember countries like Malaysia had to adopt certain measures, and they did, in time, bounce back. And what we now have to deal with are exigencies of a different nature, where health obviously comes in and growth. So there are two worlds colliding, as it were. There's health, human health, and there's financial growth or the growth of business. The two worlds have now collided, and attitudes also come in. How is the mind or the mentality of people going to impact on this financial system? So these are things that will be of concern. Now, we have often heard the word paradigm shift. We have heard that now over decades. This time, it's for real, by virtue of the fact that the paradigm includes known and unknown factors. So there are things sort of hanging up in the air. In one region, it's one way. In another region, it's another. And individual countries caught in between that are like the meat in the sandwich. And they don't seem to be able to know which way to turn. So these are the matters that are of concern. So what do we have? We have various indices that are in flux. We have customer demand, there is value propositions, savings, the savings habit, and revenue streams. All of that, we reckon, are affected in some sort of way in this paradigm shift. So to make sense of it all is going to be where the issue is. So all metrics are fluctuating, and this particular webinar will explore threats and opportunities in the days, weeks, months, and indeed the years ahead. That's what this webinar is about. Now, before we move into the nitty-gritty of the program and the discussion, we'd like to invite your close attention to this clip, which is from the IMF, International Monetary Fund. Please pay attention to some key words that will come up. I'm not going to spoil it by saying any of it, but listen very careful to this IMF report. I'm going to say something about the people. Right? One minute. there you have it. Perhaps not the brightest clip you've heard in a while. Yes, you might have even heard the word shrinkage reported there, shrinkage. Well, that's something that will obviously have to be dealt with, something to grapple with, and responses will also be varied from what I understand matters. So we'd like to say another welcome to all of those people joined in on Facebook Live from different areas. Different platforms are concurrently functioning. So we'd like to welcome all of you from the Institute of Chartered Accountants, AAT, that's the Association of Accounting Technicians. We have from SEMA, you also joined in, as well as Daily FT, Lanka News Web, that's LNW, and of course, those tuned in or linked in with ICC Sri Lanka. And we have, quite apart from those that we mentioned, people participating and listening in from Canada, in particular Toronto, then from Germany, India, Mauritius, Australia, and also Singapore. So for some, it's a good evening, and in the case of those on the other side of the planet, good morning, we might say. So our panel, very well known to most of you, Dr. Indrajit Kumaraswamy, who has served with distinction as the governor of the Central Bank of Sri Lanka until recently. Then we have Dr. Jamil Kadaru, I beg your pardon, who was formerly the deputy governor of the Central Bank of Mauritius, and he's a senior partner with Deloitte, Mauritius. Then we have Mr. Toshan Tamhane, who is a senior partner with McKinsey of India. Then we have Professor Noel Tego, who is with the University of Nottingham, and will certainly be able to provide us with some perspectives on education. Welcome, Noel. Then we have Mr. Bingumal Tevartantri, who is the CEO of the Standard Chartered Bank of Sri Lanka. Then we have the head of government engagement, Mastercard South Asia, Mr. R.B. Santosh Kumar. Then we have from UNSCAP, its Economic Affairs Officer, Dr. Masato Abe, and we're very happy to have you joining in. Then too, we have the Regional Manager for IFC South Asia, Mr. Rolf Behant, and also we have the President Incumbent of the Institute of Chartered Accountants of Sri Lanka, Mr. Manil Jayasinghe. That's our panel. And then to our moderators, over yonder in Toronto in Canada, but certainly part of our scheme of things, is Samantha Amarasinghe, who is an economist and served with the Standard Chartered Bank, and many of you would know her. And of course, we have the chairman of the ICC-SL, that's Sri Lanka, Mr. Dinesh Virakodi. So may I hand over proceedings to the moderators. Thank you.
Thank you, Arun. Can you hear me and see me? Yes. Yeah. Good morning, good afternoon, and good evening. A big thank you on behalf of ICC Sri Lanka. It's a pleasure and honor to have you on this panel. And this is actually our 6th panel that we're doing. And in fact, we ran a concert also during the COVID. We had a fantastic response for that, and we raised money for the medical workers. So what I'm going to do is we're going to do it in 2 sessions. One is I'm going to ask all the easy questions, and Samantha is going to ask all the difficult questions. And we have got a whole lot of questions which I collected over the last week, and I'll be actually using those for this session. And I will try to keep the question very short, and I would appreciate if you can keep the answers also short, since you have so many to go through. So, Dr. Indrajit, I'd like to start with you, and it is always a pleasure talking to you. You have participated in some of our fireside chats as well. So my question to you is, as you know, the Sri Lankan financial system has proved very resilient over the past 50 years. No reason to doubt it will bounce back stronger than ever before. The bounce back is the unknown this time, Doctor. All of the popular key metrics will have to undergo paradigm shifts. There is now a definite need to do things differently. So my question to you, Doctor, is what are some of the threats and opportunities you see for the financial sector if this crisis continues into 2021 and once we find a vaccine? Over to you, Doctor.
Can't you?
Okay, so now I think I've unmuted myself. I hope you can hear me. Thank you very much, Smes, for inviting me. Thank you to ICC Sri Lanka. Also, yes, the Sri Lankan financial system has been extremely resilient. As you know, we had almost 30 years of conflict. We've had various exogenous shocks, tsunami, various things. And through all those trials and tribulations, the financial system has remained stable. Now, as you know, the Sri Lankan financial system, the banking sector in particular, was very sound going into the COVID crisis. In terms of capital adequacy, in terms of liquidity coverage, the system was pretty robust. So now what has happened and what are some of the threats? Clearly, we've had an unprecedented contraction in economic activity all over the world. Sri Lanka clearly is no exception. But there are one or two mitigating factors which I will talk to you about, and then also give you the other side of the equation in terms of threats that need to be managed. The mitigating factors for Sri Lanka is that, one, the medical side of things has been handled well, and the pandemic seems to be contained. And if we are able to contain the pandemic, continue to contain the pandemic, then in 2Q 2020, we should see a recovery. Now, clearly the economy wasn't that robust going into the COVID crisis. So coming out of it, if we are to maximize the bounce back, we would need to undertake certain reforms after the election. We would have to have a sound medium-term macroeconomic framework. We would need to do some of the structural reforms. We have a backlog of structural reforms over many years. Those would also need to be undertaken if we are to have a robust bounce back. But we have the advantage of hopefully being able to come out of the crisis relatively quickly. The other mitigating factor is that almost 70–75% of aggregate demand is accounted by domestic demand in Sri Lanka. Now, in normal times, that has actually been a constraint. It has been a drag on our growth rate, because depending just on 21 million people as a market does act as a brake on growth. But at this point, being insulated from the external sector actually is an advantage. So that is another mitigating factor. So these are the kind of positive things that are working in our favor. What are some of the things that have to be managed? As you know, the banks are playing almost a unique role in Sri Lanka. In other countries, the governments and the central bank have been very much in the lead in terms of providing support for individuals, for households, for businesses. In Sri Lanka, the government has played a role, but that role has been constrained by severe lack of fiscal space. So what has happened is that the banks have had to step in. The central bank has worked with the banks to provide a lot of the support which in other countries has been provided through a fiscal stimulus. Now, this absolutely had to be done, and it's the correct option at this point. And I must say that I must make it very clear that these fiscal constraints that afflict us has been the responsibility of not one government, but the collective failure of a succession of governments over decades. So I'm not pointing the finger at any particular government. This is a collective failure of many governments. And we are in the position we are in terms of the fiscal space, which has meant that we've had to put an extra load on the banking system, more of a load in Sri Lanka than in other countries. So this has to be managed now coming out of the crisis eventually. So what we need to do is to make sure that in requesting the banks to play this role, which they must do, and they must do the maximum possible to support the government's program, the central bank's programs in terms of supporting individuals and businesses. But particularly the private banks need to make sure, need to balance the need to do the maximum possible with protecting the interests of their depositors, who account for 70% of their total assets. So that is the balance that the private banks need to strike. And that is where there is a risk which needs to be managed. The state banks have more of a leeway. They have the sovereign standing behind them, albeit a fiscally constrained sovereign, but yet a sovereign. So they have a little bit more space to maneuver. The private banks need to be careful, but I'm sure they will manage this well. And the central bank, I think, has played a tremendous role. Central bank actually, as I said, because they've had to kind of step in because they the lack of fiscal space, they have done very well in mobilizing the banking sector and also in the direct role that they have played. So I'm pretty confident that we should have continuing stability. And I just a couple of points. I think what could be done, I don't think we can assess whether the regulations, risk management frameworks are sound or whether they need to be changed, because we are still in the midst of the crisis. They say you should wait till the sun is shining before you repair your roof. But what we can do now is perhaps have an analysis, a vulnerability analysis, where I think the regulator can work with the banks to see whether under different scenarios for economic contraction, for the buildup of bad debts, in terms of the deterioration of asset quality, under different scenarios to see whether even under the maximum capital depletion, the banks can still remain solvent. I think that exercise is something we can do now. But as I say, until the contraction is over, until the existing moratoria come to an end, because that is when we will know that is when we'll be able to estimate the capital trajectory. So these are all things that we need to cope with in the future. In the meantime, I think there's a good case for doing a vulnerability analysis. Okay. So let me stop with that. I'm sorry I went on.
Okay, thank you, Dr. Indrajit. Before I move to Dr. Jamil, Dr. Indrajit, I'd like to ask you a quick question. You refer to private banks, and since you have been in the system for a while, what are some of the risks that we need to be mindful of from a private sector bank standpoint?
So clearly, as you know, under the various schemes, under the refinance loan scheme, under the partial guarantee scheme, it is, I think, incumbent upon all banks, including private banks, to do the absolute maximum possible. But as I said, it is really up to the boards and management of those banks to make sure there is a balance and to ensure that the quality of assets do not deteriorate to the point where the solvency of the bank comes under threat. I think the central bank's partial guarantee scheme, I think that has been a very important, I think that's arguably the most important intervention on the part of the central bank, because liquidity was one problem, and the central bank has done tremendously well in creating liquidity through its monetary policy measures, through regulatory relaxation. In various ways, it has created liquidity. But having liquidity is one issue, but then what about credit risk? Particularly for the private bank, credit risk is a problem. And now the central bank has stepped in with its guarantee scheme, and it's guaranteeing between 50 and 80%. And I think that should provide comfort for the private banks, and that will certainly reduce the risks faced by them.
Okay. There's a very politically very sensitive question here, which I will not ask you. I'll park it for the end.
By that time, maybe my electricity will run out.
Dr. Jamil, great to have you. Thank you for joining us. The question to you is: a number of central banks have embarked on unconventional policy measures for the first time. What are some of the measures and policy responses that have worked well that South Asia perhaps can implement in the short term?
Okay, so first of all, thank you very much for this invitation and greetings from Mauritius. So I will just start basically by saying that this crisis is very different from what we experienced compared to the recent crisis. Usually when you talk about a financial crisis, you think about tightening of regulations, for instance. But here what you are seeing is loosening of regulations. If you look at what the central banks have been doing since the onset of this pandemic crisis, you will see, and it's across many countries, not just Mauritius or Sri Lanka. So you will see, first of all, working capital loans, debt moratorium, forex market intervention, providing foreign exchange to importers. Okay, so and on top of the usual monetary policy loosening. So if you compare that to what happened in the last crisis, there was loosening of monetary policy, but tightening of regulations, very much tightened regulations as a result of a 07, 08 crisis. And here we have a loosening of the regulations as well. So the big question is, I think Dr. Kumaraswamy touched on the credit risk. So loosening of regulations for now is working well and maybe is desirable. To what extent can we continue with a relaxing of guidelines, so credit guidelines, for instance, by central banks? In Mauritius, just touch base very briefly with what's happened in Mauritius, with your permission.
Yes.
So, you know, tourism, for instance, is a major pillar of the Mauritian economy, a bit like for Sri Lanka, also, I understand. And we've been a COVID-free country for some time now. So government is thinking about opening up the borders, but you know, there are very clear risks also as to how this has to be done. But there is a choice to be made between livelihood and life. So, you know, there's been a big debate recently on that. Government also, I would just add on what Dr. Kumaraswamy mentioned. In Mauritius, very interestingly, the scheme targeted not only the formal sectors of the economy. So there was a scheme for informal sector people, so it's basically those guys who are not registered, but they still got some help because of livelihood and life, I would just say. So I think there are a number of challenges going ahead. I think we're loosening of regulations, but I think one thing that would be interesting is we've all been talking about demand management policies so far. Basically, we've been talking about monetary policy or fiscal policy. I very much believe, you know, now with a new normal, with a new attitude from consumers and producers alike, with a new challenges, there's definitely rethinking to be made on structural policy. So maybe we can talk about that afterwards during the program.
Okay. In terms of stimulus, do you think South Asia has done enough?
Sorry, I just missed you on the last one.
In terms of stimulus, has South Asia done enough? South Asian governments done enough? Well, I know it's a tough question, but then.
Well, I think I would reply from a generic point of view. I would say everyone has been doing a fair bit.
Now that you're in the private sector, I think you can say a little bit more.
So I think the space, it also depends on the space of individual governments. So compared to the 2007 crisis, where there was more fiscal space there, I think now the space is a bit already less. And actually, that's a very interesting point you're raising, because going forward, I am starting to question myself with fiscal space already very much constrained, and monetary space also getting very much constrained, because now we are talking about near zero interest rates in many countries. There's a lot of asset purchases. You know, to what extent can we go, because that might have repercussions on the asset market, asset prices, bubbling of assets, and so many things that can happen. So we have to be really crafty on the policy side.
Okay, I'll stop you there and maybe come back to you later. Manil, can I shift to you? Yeah, can you hear me, Manil?
Yeah, I can.
Yeah, okay. Manil, this question is not mine, huh?
Okay.
So you need to be patient and listen to it. The question says, Operational resiliency is virtually a given with all the of the QE and liquidity forbearance by central banks. The auditors are the enforcers of the regulators' drive towards capital resiliency in this financial crisis. Full stop. Capital buffers are required without a doubt. Full stop. Capital buffers, within brackets, impairment should not be a cause for financial instability in a financial institution. Full stop. By overproviding for unknown and ignoring the fact that all banks are taking hits on capital from destroyed demand due to COVID. Full stop. The accountants therefore have a responsibility to push back on regulators. I'm repeating that again. The accountants therefore have a responsibility to push back on regulators and rating agencies who tout the argument for restoring these capital buffers through higher impairment and more stringent staging profiles. Full stop. Your thoughts?
Thank you, Dinesh, and thank you to ICC for inviting. This is a interesting question. See, on the one side, you have reasonably good picture, and on the other side, you're also trying to show the investors or the people who are trying to provide capital what is the true status of some of these events. So this whole equation about impairment now, I've been having this for the last several months, and a lot of pressure is brought on us to say that why are we using a expected loss model? Why are we putting through these impairment and reducing the capital of institutions where they are, the lending will obviously get reduced because capital will get eroded with impact. Other side, don't you think that you also have to give the right picture to potential investors and investors who really rely on the financial information for them to make economic decisions? So it is that question that comes out to play. So you can try to give relaxation on some of these things, but then you are going into that unknown territory. No one really knows the real picture of what has happened, which I think creates a bigger uncertainty when it comes to raising capital for investors to look at performance. So all that becomes a bigger problem than giving the right picture. So you give the right picture and you take decisions on that, not a problem. So that is why I think central bank, I think as Dr. Kumarasamy quite rightly said, central banks have given certain relaxations in order to probably compensate for some of these impacts. Recently I have had discussions as to, should we not spread out some of these impairments over a period of time? But again, the question is, what information does the market want, or the relevant information that the markets want, in order for them to make decisions? So that's where this whole equation comes to.
Right.
I have also had a situation where some people said that depositors might get panicked when you start putting these high provisions. Well, the question is, wouldn't they want to know the true picture rather than be sort of clouded by a better picture, and then subsequently find that you are actually having performance reductions due to this factor?
Anil, you didn't really answer my question.
Which is? Sorry. So the issue is, sorry, go ahead, sorry.
No, go ahead. Manil, go ahead.
So the issue is, Dinesh, the issue is that I think the question was, when central banks are sort of giving all these relaxations and reliefs, the accounting is coming and basically taking
tightening up.
Tightening up. Accounting has not tightened. It is basically stayed the same. So you are really reflecting the impact of this whole pandemic and the impact it has on the borrowers and impairment and things like that. So accounting has not tightened. If at all, it has been a little bit more considerate of the current situation, but it has not tightened.
Yeah. So, Manil, as you know, the moratoriums will end in September,
Yeah.
right? What's in
Correct.
store for the banks post September?
Actually, the
Yeah.
moratorium should not have impacted the impairment provisioning, because if you notice that in the guidance that has been issued, it basically said a moratorium neither increases or decreases provisions, but you need to look at the underlying
Yeah.
credit and whether those credits have suffered a significant increasing in credit risk. Now,
Yeah.
if it has suffered an increase, then you need to put provisions in now, not to hide behind the moratorium and then subsequently maybe in September or December when the moratorium goes off, you will have huge provisionings coming in at that time. That was not the intention. It's just that some people are, I think, hiding behind the moratorium and postponing the provisioning. But it is a question of, you to realistically look at
Yeah.
the impact the pandemic has had on your underlying borrowers, and as a result of that, whether there is, lifetime expectancy of losses is what is required.
Okay. Okay. Thank you, Manil. I will not ask Bingumal to respond right now. I'll tell him to respond later, but I'll actually move on to Rolf. Rolf, can you hear us? Rolf,
Unmuting.
can
Yes,
you
I
hear
can.
us?
Yes, I can.
Yes. Okay. Rolf, my question to you is, IFC works closely with several banks in South Asia to support SMEs. Given the huge push globally to keep the SMEs alive in this pandemic, what is IFC doing to support the global drive to keep SMEs in business and make them more bankable?
Okay, it's a big question. What are we doing globally? But to start off, let's focus on Sri Lanka. And I would just like to agree with my previous speakers that we are dealing with an unusual crisis. It is a global crisis, and it is not just financial, it's an entire economic crisis. The second point to keep in mind is that this crisis, the financial sector is always a mirror also of the real sector. And I agree with actually the Central Bank of Sri Lanka has done really fantastic efforts in really trying to keep the sector afloat. And as was said, really by not increasing, but by relaxing actually things. In this regard, so the key thing to really do at this moment is really provide liquidity to the real and to the financial sector. And this is exactly what IFC has been doing globally. We created an $8 billion specific COVID fund to help our clients globally, where we have provided short-term liquidity both to the real as also the financial sector, and especially the financial sector as the conduit really to reach the SMEs. We are now finalizing a survey really on the impact of the crisis on SMEs, and hope to be able to show the results in August after the elections. It's not so much, I don't think there will be that much that is surprising. It's more than to have to prove that the effects have a neutral source, and this I think are key impact. We will be looking further really to I think work really how can Sri Lanka rebound after the crisis? So this perhaps thesis 3. Sri Lanka will have to, I think, in my view, move more towards keeping value added of manufacturing in the country. So there's opportunities in agriculture, opportunities in also especially in the ICT sector, where I think the Sri Lanka needs to move up to let's say the value chain and the processing and actually keep more in the country. And this will help then the real sector to rebound, which will then also help the financial sector to respond.
Okay.
Quite a mouthful, let me stop there.
Okay. Rolf, on the tourism sector, given that it will take at least another 1 to 2 years for that sector to recover, what can IFC really do to support that sector in the short term?
I think this is really more a question, really, what can we do globally to support tourism? Because the key issue will still be Sri Lanka depends really on foreigners to come into Sri Lanka. It cannot really be the Sri Lankans, they will be covered part of the demand. But the key issue will be how can we really help the demand to recover? I mean, we can help to do surveys, but this is a global issue that how to restore the confidence of tourists back in Sri Lanka, how to restore the confidence back into airline industries. I mean, this is a global phenomenon.
Yeah, okay, thank you. Dr. Jamil, can I, before I shift talk to Bankable, can I ask you a quick question? What can actually governments do to support the tourism sector in the short term to stay alive? Because so many jobs are at stake.
Okay, so yeah, thank you. So we've already seen government in Mauritius, and I'm sure in Sri Lanka also, already active in the tourism sector, because that's a major sector with considerable employment of the country, a major source of forex exchange, forex earnings, and a very key sector. So in Mauritius, for instance, I can tell you, so assistance was given directly to employees also, but on top of that, now the central bank actually is coming up with a funding line whereby they would be ready to invest in what we call systemic companies. So a number of the tourism and hotel operators would fall under this category. So right now, this is where we've reached in terms of the scheme, but of course, the operationalization is still being finalized because, of course, you know, it is about public money also, maybe part of it reserves of the country. So you have to be very careful in utilizing this money.
Yeah. Dr. Indrajit, any thoughts around that? Because I know you played a key role during the Easter Sunday attacks in getting the system, the financial sector back into play. Dr. Indrajit?
Yes,
yeah.
yes, Dinesh,
yeah.
sorry.
Yeah.
No, I think
yeah.
probably this time around it's more challenging because that was a one-off event.
Yeah.
And we were fairly confident that by the time the main tourist season came at the end of 2019, right? 2019,
yes.
That there would be a significant pickup.
Yeah.
Now what we don't know is when the pandemic is going to end, when travel and tourism are going to be possible. You know, it's an open-ended problem. That's the difficulty. So there, I remember arguing with you that 6 months is enough, and we'll read after that. By that time, things will pick up, and as it turned out, that was the case. But now, you know, it's very difficult to say. So clearly, it's a critical sector. We have to find some way of keeping things going, but it is a much tougher problem to handle this time.
Okay, thank you. Bankable, can you hear us?
Yeah, Dinesh, I can hear you.
Yeah, okay. Bankable, my question to you is, Sri Lankan banks have entered the crisis with higher liquidity and strong capital buffers. The central bank has been proactively leading in this front, and they have supported the industry in a big way. How do you see the moratoriums playing out, and what impact will it have on the FX market given the restrictions we have currently?
Yeah, thanks. First of all, Dinesh, thank you very much for inviting me. Thanks ICC as well. Yeah, Dinesh, so looking at what happened, I mean, we were actually coming out of Easter attacks, and at that time, I remember we also had a moratorium at that time for predominantly for tourism. So what we did was actually this year, we basically, you know, extended the basically the same kind of program. We called it Saubhagya this time. Then we realized that, you know, that program is not enough. So it started with personal loans to credit cards, then went into, you know, SME sector, corporates, etc. So now we've gone into different levels in terms of moratorium, you know, in terms of sectors as well as credit guarantee schemes, so on and so forth. It is, I mean, it's a 1 in 100 years event, Dinesh. I think as banks, we have a role to play. I don't think we have found all the answers at this point. Like you correctly said, September, by the end of September, moratorium is coming to an end. So we will see the true colors in October. As we speak, the economy is weathering the storm really well, in my view. If you look at the export numbers and retail spends, and things are bouncing back. Specifically about the exchange control regulation that we imposed during the crisis, I think more than the crisis, I think we also had, you know, other challenges, you know, going into 2020, apart from the COVID crisis, you know, because we were coming out of a slow growth economy for about 3-4 years. Then we had Easter attacks, and then COVID, and there's a huge impact to our tourism sector. That's about $3.7 billion. So we had to control imports. There was no choice. I don't think we had any choice there. So we did some good work. We controlled the imports. We saved some money. So we month on month things were improving. Now, of course, there's an impact. I mean, of course, we are controlling the exchange as a result. So if you open up, I mean, there are deadlines to open up some of these controls. There's a possibility of, exchange rate, rupee depreciating basically. The emerging market currency, anyway, rupee would depreciate by 5% minimum. That's given. But if there's a sudden, surge in imports, rupee can depreciate significantly.
Okay. Okay. Bankable, as a CEO, what changes do you like to see in our banking practices?
Well, I think first thing is, Dinesh, I mean, we experienced something very different in the last 3-4 months. What I would like to see is not going back to 2019 again. We should change the way we work for good. So I think the things like working from home, the digitization is a big agenda. We are doing this webinar from all over the world. We are joining, and any other day would have fly down, do this webinar. So things like that, I think for the country, the biggest thing is the national ID, digital ID. So we are pushing on that because that will give us, leeway to do real-time onboarding, digital onboarding. So some of those changes, then the governance around the policies around data governance and sharing data, open banking, etc., I think is critical for the banking sector. So we would like to see some of those reforms coming as a result of COVID.
Okay. One quick question before I move on to Toshan. In terms of strengthening the balance sheet and improving our ratings, what kind of scrubbing do you think we need in the banking system?
So I remember, Governor Kumarasamy used to say this, you have to stay on course. I think the course, last year they say the path has changed, but I don't think we have a lot of choices. So I think what we have done so far is very good. So hopefully after the elections, we believe that, there'll be FDIs coming our way. At least $2 billion will flow into the country. Exports have done really well. Tourism is the only unanswered question as we speak. So that's a $3.7 billion economy. So if we save on the imports and the FDIs, worker remittances, comparatively, it's again, hovering, I think about 10% year on year, 10% below year on year. So you can't really complain. So we have another $2.8 billion to settle. So after that, we can look at how we will manage to 2020. So it's a long, right now, 6 months is long term for us.
Okay. Thank you. Thank you, Bankable. Manil, before I shift to Toshan, just one quick question. I know the balance sheet is your pet subject. What can banks do actually to strengthen their balance sheets post-COVID?
Dinesh, I think at the end of the day, balance sheet also to some extent will be dependent on how the economy is also going to fare. I think you may be knowing that Sri Lanka about 52% is in the SME sector, and with this whole pandemic, it's the SME sector which has had the highest hit. Now, to me, it's a question of nurturing these people back on their feet. So when it comes to strengthening, if you look at the balance sheet of a bank, I think 70-80% of on the asset side is all lending. And then you have the investments which on government securities and things like that. So the strengthening has to come in the loans and advances. And that has to happen through, I think, I wouldn't say better credit practices, but strengthening the credit practices so that it supports the current environment. And then helping businesses to come up. That is my...
Yeah, that's a good point.
Short term,
I really
don't.
Yeah. Short term, you have answers, not long term.
Long term, I don't know where things will end up.
Okay. Toshan, can you hear us? Toshan, can you hear us?
Yes, Dinesh, I can.
Right, okay. The question to you is the capital markets in South Asia have taken a beating in our region. What will be the new normal for venture capital, private equity, and hedge funds going forward?
Yeah. Hey, Dinesh, interesting question. And again, thanks to you and the ICC for having me on the panel. I think as we talk to VC firms, private equity firms, hedge funds around the world, I think they are also first just reeling from the shock. Okay? I think it's not as if, it's not just new opportunities for them. Even their existing portfolios have been marked down significantly. I think people are sitting on mark-to-market losses on the public market side, anywhere between 50 to 70%. And there is a huge stress in their own abilities to infuse new funds. And yet, many of the PE funds and the VCs have actually been lucky because they raised their funds just before the COVID. So December 2018, the year ended, actually had the highest amount of fundraise that happened globally. So you see all the PE giants flush with dry powder. And right now, many of them are actually trying to figure out which are the attractive pockets of opportunities. And for example, we saw the whole geo where Mr. Ambani raised sort of $13 billion and it's still counting. We are seeing some of that happen in Southeast Asia, and the environment in New York is let's find opportunities wherever they exist. And I do think China, for example, right now it's a very tricky situation for all the US, Canadian money to go to. I think Brazil, LATAM is still a bit under stress given the COVID numbers and what's happening. Europe, any case, the growth rates in Europe have slowed down substantially. I think many of them are looking at shoring their existing portfolio companies. Do they need to double down? B, are also looking to figure out new areas. And interestingly, all the themes around, say, sustainability and how do they really put money in new industries where there is disruption happening. Because now the PE firms, they are realizing disruption is happening, and yet many industries actually have phenomenal tailwinds. Suddenly banks are, I think we saw the discussion earlier, banks have now gotten into amazingly digital footprints. Companies have started relooking at their supply chains and are relocating entire plants. Real estate as a sector is getting disrupted. And many of the PE firms see opportunities in this crisis to really help in their capital and, of course, to make significant returns.
Yeah. Well, what are some of the sectors that are attractive to these groups?
Yeah. I think it's difficult to make a generalization, Dinesh, but if I just look at the big ones, I think first is a lot of interest is there naturally in pharmaceuticals. Yeah. Suddenly you're seeing number of clinical trials have gone up. The entire doctor engagement digitally that players are doing and putting money into a lot of these platforms, I think is just at an all-time high. So pharma is one. Second is telecommunications. We saw immediately what happened to the stock prices of Zoom and others, because suddenly people are at home and it poses significant constraints on bandwidth and all the new digital models. So I think TM is the second sector. I think interestingly, energy and renewable infrastructure is a third, because people realize that the requirements of sustainable power is going to be very critical going forward. And lastly, financial services, because that's a sector which will keep needing a lot of capital, and these are the guys who have that capital. So FS, both banking and insurance, will continue to be extremely important.
Okay. Do you also see a shift from emerging markets to more developed markets in the coming months and weeks?
Yes and no. I think the developed markets, there is clearly comfort. Okay, and you do see flight to safety in some context. So you want to, at least have a certain portfolio has to be earning stable returns. So you want to not take too many risks. But I do think there will be opportunities even for emerging markets, because see, by definition, many of the funds have their mandate as emerging markets. They need to invest in certain economies and certain themes. So those funds cannot actually move away. Yes, there are funds which are global multi-asset class managers. They may actually sort of, at least in the near term, get more comfortable with at home.
Okay. Thank you, Toshan. Rolf, you have any thoughts around that in terms of the shifts that might happen in?
I think I broadly agree. I mean, the obviously anything digital will be the future because this will be anything disruptive will have opportunities. As I said, I think in Sri Lanka, it's really how can you move. Sri Lanka is, for example, in agriculture, Sri Lanka just exports basic tea. How can Sri Lanka move upscale and produce packets of premium tea? How can we move away from basic pineapple into really more processed good? How can Sri Lanka move away from cassis into really high quality cinnamon? So there's opportunities there. I think Sri Lanka has great opportunities in the ICT sector. So you see the South Indian continent where you're getting like all kinds of buzzwords beyond fintech, you're getting to agtech, infratech, clean tech, regtech, subtech. So there would be huge opportunities actually, and hopefully to bring in all foreign investors. Just to name two areas.
Okay. Rolf, for IFC, what would be 1, 2, 3 in your bucket list?
ICT is an area where we would like to expand more. And I think also agricultural processing, but this requires support from government. I mean, that's also what Dr. Kumaraswamy said. It requires more reforms. And I think many things have been done, but really moving upscale and to help Sri Lanka actually regain its upper middle income status. And that would be, so private sector is willing, requires reforms from government. And the two come together, you can see many things happening.
Okay, a quick comment on South Asia.
Look, South Asia is a very complex. It's not just general because you have your big India, you have still your big Sri Lanka and Bangladesh, and you have the very small Nepal and Bhutan. So it is quite heterogeneous. South Asia is one of the few regions that is actually not as regionally interconnected as many other regions. So that would be something where the governments would have to work on. But it's very heterogeneous and therefore hard to compare. Luckily, we still have a big India that still has a huge domestic economy and then pulls the entire region. Bangladesh is still highly dependent on the exports of ready-made garments. So every country is different. It's hard to generalize. Apologies.
Thank you, Rolf. Santosh, can you hear us?
Yes.
Yeah. Great to have you. In fact, I'm sitting behind the picture that you donated to ICC.
Thank you so much, Dinesh.
Yeah. I looked at a lot of we got a couple of questions to ask you, but what I did is I had to put them together. So essentially, the question is people like to know the impact of the COVID crisis on the Mastercard business in general. That's question number 1. And also, if big tech will disrupt your business model, number 2. And how banks are future-proofing themselves from cyber risks associated with your card business. So 3 questions in all.
Okay. Dinesh, first of all, thank you so much for inviting me. Thanks to ICC also. It's such a wonderful webinar and so good to speak with such a distinguished panel. So I'll, first of all, like everybody said, COVID-19 is undoubtedly the biggest global event of our lifetime. It's bringing uncertainty to every aspect of the society and business. So it's not, all the industries are impacted. So I wouldn't say whether it's payment, banking, tourism, across the globe, all the industries are impacted. So it has impacted our business also. The transactions numbers have gone down. That's something that we have seen. But definitely there is a shift in the way people transact these days. Earlier it was face-to-face transaction, physical transaction, brick and mortar model. Now most of the people are going digital. They're going the e-commerce way. They're finding it comfortable. So if you see our industry, the payment industry, there is not much transaction happening on the high ticket size like travel, hotels, luxury items. It's all shifting towards essentials, groceries, medicines, those kind of shopping. But we have noticed that there is definitely a lot of shift in the ecosystem. The way consumers are doing the transactions, the way merchants today want to get digital. There are a lot of merchants who didn't believe in a POS terminal or a QR transaction or e-com transactions. They're all coming back into this gamut of digital transactions. So that's something that we're seeing. Definitely there's been an impact to the business, but we are confident that once the pandemic is over, business will come back. But during this time also, we are encouraging people to do a lot of e-com digital transactions. We are supporting them. The government is supporting so that the the industries that are impacted, the kirana stores, the small merchants, the shopkeepers, are all enabled on a digital platform, and they're able to do transactions. So that's one part of your first question. On cyber risk, definitely as people move towards the digital world, it is very common that fraud and risk will also increase. So we have a lot of tools and solutions that we work with the banking industry. We provide them to ensure that we control the frauds, we control risk, and we are able to identify it in a very early stage and prevent it from becoming a big loss to the financial system, because the consumers, the merchants lose confidence once there's a big fraud that happens. So we have to protect. That's something that we invest a lot in. We have various solutions that we provide to the merchants, to the banks, to ensure that they are covered from all the frauds and risks.
Okay. In terms of big tech disrupting your business model?
No, Dinesh, it's such a large opportunity for everybody. We all have to be part of the ecosystem. All of us have one focus area, is to move our countries from into cashless society. So there is a lot of room for everybody to operate, everybody to play, support each other, collaborate, and to provide benefit to the consumer, to the government, to everybody in the who's part of the ecosystem.
Okay. Santosh, as a big boy in the region, what keeps you up at night these days?
Definitely, Dinesh, we would want the pandemic, like all of us in the panel and all of them who are watching, we want the pandemic to end very soon. We want a vaccine to come. We want life to become normal. It has been challenging for everyone on business terms, on social terms. Nobody ever expected it. It's been a blow to a lot of people, but we all have learned. But definitely, as human beings, we would, and as business people, we would want the pandemic to and world to be normal and people to travel. And I do love to travel to Sri Lanka once the airports open up.
Okay. This quickly also, if you can tell us, how is India coping up, the business community coping up to this crisis?
So there is a lot of
resiliency. You're still in a lockdown,
yes.
Right? You're still in a lockdown.
There is a lockdown, yeah. Unfortunately, Dinesh, India, the population is very high. There is a risk. So social distancing is something the government has been enforcing. People are also educated, they understand. But countries like India, there is so much of population that is dependent on daily wages. So lockdowns have an adverse effect also on those kind of people. So government is trying to create a balance so that the economy survives. Those people are also not impacted. But the pandemic doesn't spread. So they have to take that control. So they are trying to do various ways and means to ensure that they maintain some kind of lockdown, but also allow business to start coming back and people to start working and the economy to come back to normal.
Okay. Thank you.
Thank you, Dinesh.
Dr. Noel, can you hear us? Dr. Noel, can you hear us?
Yes, I can hear you. Thank you.
Thank you, Doctor, for joining us. This is a bit of a thorny question. So I think it's important that we get an answer from you. The question is, governments are losing interest in financial reform despite warnings that dangers still lurk, full stop. Will deregulation become a slogan for the sake of jobs and growth for finance ministers?
I think for me, looking at how policy response have gone so far, I must say that I'm very disappointed by governments across the world. It was good to start with that we safeguard lives and put livelihoods on the back burner for a while. But at the moment, I think that we focus too much on saving lives and not enough on saving livelihoods. And at a point in time, you would ask yourself, saving lives for what? Because life without livelihoods doesn't matter at all. And so, in my view, I mean, whatever policymakers would do, and I'd come to answer the question of deregulation or not, is to invest in our, what I call our forecast capabilities or our foresight capabilities. We've got to find a way of understanding what is happening and model ahead of the curve, not behind the curve. A lot of what we are doing is reactive. to the flow of the pandemic and so on. We've got to start modeling ahead of the curve. We have the technological tools to be able to do that. I mean, we have means of collecting data. Fortunately, a lot of the economic activity is shifting to areas where data collection is automatic because we are shifting to digital means already. We have the brain power to use AI and others to begin to model and to have different scenarios available to us. And we can then start pushing which scenarios are likely and which levers we should begin to push. So whether it goes down the route of deregulation or it goes down the route of tighter regulation in some places, we've got to, it's got to be evidence-based, and we've got to start using the data and the ability to make sense of the data very quickly. And for me, the slogan is simply see sooner, act faster. Yes, I would say see sooner and then act faster for government and so forth. So that's where I see. I think where for me there has to be policy flexibility in terms of watch the situation and respond to the situation, predict the situation, and go in terms of that. So that the policy flexibility has to be there. And then the international community must come together. You've talked about, how do you call it, issues of tourism and travel, etc. I'm beginning to see almost an apartheid developing in terms of travel and opening up air corridors and things like that. The opening up of all air corridors have very little to do with the pandemic spread itself. There's a lot of fear, etc., and things like that. We need the data, transparent data, real-time insight from the data, interpretation of the data, and have the courage of our convictions to act. And then I'm seeing politicians being too conservative because, particularly in election time, etc., where no politician wants the deaths of some people on their hands. My goodness, people are going to die. That has to be a given. And we've got to be mature about that. And at the moment, lockdowns are dealing with a physical ailment. Can we imagine the huge amount of mental health pandemic that will flow out of lockdown? Because people are cooped in, because they don't know what the future would hold for them, etc. So what I'm saying is that the variables are many, and we have the means to be able to look at them, and we should be able to look at them both from a national perspective, but from a supranational national perspective. And the private sector and government should keep working hand in hand.
Okay. Thank you, Dr. Noel. Before I move to Dr. Masato, just one quick question. I'm told that you do a module on governance and ethics. What are you teaching your students these days in terms of the new normal?
Oh, myself, you mean?
Yeah.
Yeah, well, in terms of governance and ethics, I mean, this time is, I think the key issue for me is mainly restoring trust and confidence in institutions. Because once you restore trust and confidence in institutions, you get stuff going. So let me give you an example. In the UK, when government makes a pronouncement about this is what is happening, this is a policy direction we're going, most people don't believe them. You know, and when people don't believe the government and the institutions that are in place, when your statistics are not believed, when some people would think it is fake news, etc., and things like that, then you have a huge problem. And you cannot get the public to go with you on the policies that. So one of the biggest things for me is how do we restore confidence in institutions? And our governance mechanisms are key in order to be able to do that. There's an excellent report by Edelman Trust on institutional trust with COVID. And I recommend that people have a look at that. And the other thing is that leaders should be open. And now, I mean, we've moved from the time of a hero leader to a more human leader. And we are all in the space. There's been a reset, and leaders should be more open in terms of that. And I think Toshin's organization did an excellent job in bringing some leaders together, and they're beginning to talk about the fact that they believe that they can do more than they are doing at the moment. So let me give you an example, and I hope you don't mind, just a minute's example. Leaders have talked about the fact that COVID has moved them to do a lot more, a lot faster than they could do, and that they still think that there's a lot of room for them to do that. So I'll give you an example of a hospital in the US that was using technology. I decided to use technology to do visits, so visits in COVID. Last year, they did 2,000 for the whole year, what we would call televisits. This year, they had planned for not more than 10,000. They didn't think they have the capacity to do that. Right now, they are doing 5,000 per week. So that is the scale by which it is increased. And I know organizations like Unilever and Co are doing the same thing. Now, what the leaders, the CEOs who have come together are saying was that they are astonished as to why they never had that level of ambition to tackle growth, etc., before COVID. And my view is that one is a failure of imagination, but right now it is good that leaders are talking about that. So humility in leadership is one of the things that we ought to talk about. And finally, for me, is transparency. I mean, transparency across the board, and as business and governments and others are talking to each other, there is transparency, and where there are disagreements, people own up to the disagreements. Whoever have decision rights, take the decisions. But what we cannot do is to adopt a wait and see tactics in everything. There's a place for wait and see when we do a post-mortem and we do more fundamental reforms of the system. But at the moment, livelihoods and lives are at stake. We cannot adopt a wait and see.
Thank you, Dr. Noel. My last question is to Dr. Masato. It must be pretty late, and thank you very much for joining in. My question to you, my question to you is, has the COVID-19 crisis derailed the sustainability agenda? That's my question number one. How do you plan to pick up, and what is the appetite now for sustainable finance?
Okay, probably I would.
Dr. Masato, you have also worked in Sri Lanka, I'm told.
Pardon me?
I'm told that you have also worked in Sri Lanka.
No. But okay. I've been working for Sri Lanka past 22 years, Okay. And even I used to have my the direct supervisor from your country.
Okay.
Dr. Ravi Ratanaki. I think he's a kind of advisor to your maybe commerce minister.
Oh, okay.
Yeah.
Okay.
So may I maybe start from the my professional and technical view toward to the present situation, right? We have the discussing, debating the present situation, how we could tackle, particularly how we could promote our sustainable development agenda, right? Many of you heard about the SDG, Sustainable Development Goal, and that is our main focus, to promote and push forward, right, for our future societies. However, having seen the present development, we have a big the question that number one, this type of shock, how long would it last? We haven't really know the duration, right? Possible duration of this shock. We have seen first the many economic, financial, and political, and even war. The past the century. However, this situation is very unique. Because we haven't really seen the end of the shock. Because presently we don't have a vaccine, no vaccine, and no effective medicine. Even though we claim that this medicine could work or not, something like that. But we are seeing such a the huge uncertainty, and we don't really know how long it really lasts. And also, this situation happened under the the ongoing, globalization. Globalization have received some political, the attack, the recently, but this blow, this natural, the kind of pandemic blow is so huge, and the impact is also, exaggerated, become big, right? And also there are many uniqueness, like a country, like Sri Lanka and Mauritius. Those, the island countries, they, they're doing much better to contain, the pandemic more than other countries. But some countries really suffered, right? And even in the same sub-region, same region. So we are now seeing the, the kind of a very unique situation. And also, Danish, I think you mentioned that the new normal, right, earlier. Also this is leading some debate at the UN system. UN system try not to use the new normal presently because we don't know, right, definition and what it is, right? And many mass media using a new normal. But once again, I could tell you, we haven't really know what new normal will be. And, it is a dynamic, dynamic, the animal or, the phenomenon, and what, this, the things are changing, and maybe once again, probably new normal could be unique to each country or each, the sectors, each, I mean, the people, So we are, under the such a, the kind of, really huge, uncertainty, right? So having said so, what I could, offer, right? How we could, UN system, could, still promote the sustainable development agenda, or recently many people use the ESG, the framework, environment, social, governance, framework, right? How we could, the work with the ESG, that we may need to embed, such ideas, throughout the system, financial system, political system, economic system, and the society, right? But such a thing requires a lot of, collaboration, among the government, financial institution, and also the, the business association, like ICC, Sri Lanka, and also micro, small, and medium enterprises, and the civil society organization, those people to embed such idea into their norm or cultural level, the things that, and at the same time, right, the regulators might, think about such a, the agenda to be voluntary or mandatory basis, such a thing we need to make a, make our choice, and at the moment, personally, I prefer to go to the voluntary basis, under the present crisis. We shouldn't really push too much to the stakeholder to focus on that thing. But we need to do, through the education, training, dialogue, stakeholder dialogue. We need to tell such a, the idea to every one of us. And finally, I want to mention one more thing, that digitalization. I think many speakers today already talked about the ICT, digitalization, digitization, those kind of things. Recently, I learned that in the States, US, past 3 months, right, rate of the penetration of the e-commerce based on the internet, right, in the States, the past 3 months, the equivalent of to the, such a rate of the past 10 years, because, due to, because of, the present, COVID pandemic, right? So digitalization, e-commerce, those things should give us some answer, quick focus. And green finance might focus on such a, like a solution of fintech, for example, maybe tokenization of the carbon credit, based on the blockchain technologies, and maybe using the cyber currency. Of course, we need to the security issue. Also, some of the speakers already talked about the security issue under the digitalization era. So we need to think about that. But the digitalization, e-commerce, particularly Sri Lanka might take such a step to focus on now, and SME focus on that. You are big business, they are focused on that, even agriculture, service construct, the manufacturing service, right? Such a focus could give him some good start after the, hopefully soon to come the after, post, pandemic era. Thank you.
Thank you, Dr. Masad. Before I hand over to Samantha, Dr. Indrajit, just two quick questions. Can you hear me? Yeah. One is on the financial sector reform. Should we fast track or should we take a back seat? And then in terms of green finance, I mean, Dr. Masata was saying that we are actually not making use of the available funds in the region. What are your thoughts around those two areas?
Before I answer that, Dinesh, may I just say a couple of words on this regulation, deregulation discussion?
Yeah, okay, sure.
Thank you. Clearly this drive for less regulation was there even before COVID, because there were those who said that these global standards have been designed for advanced countries and they're far too restrictive for developing countries. And that argument probably now has gained greater momentum. But I'd just like to really point to one word of caution. That is, we are living in a world which is having an increasing propensity for major shocks. The intensity and severity of climate shocks are increasing, the frequency is increasing. There will be other pandemics. We've had 4 or 5 pandemics over the last 20 years. Shocks emanating from volatile capital flows will continue to be there. And now we are moving to a multipolar world and geopolitical risks have been elevated. And these risks can be translated into disruption of essential supply chains, international trade, and even technology. You have seen what's happened in the UK. Their 5G rollout has been undermined, I would say, by the action taken against Huawei. Capital flows. So with all these sources of shocks out there, and it becoming more frequent, more intense, to deregulate and have less buffers to cope with these shocks, in my view, is something that we should treat with great caution. It's better to err on the side of caution. Okay, you asked me whether we should fast track financial reforms or not. Clearly, right now, the preoccupation is to get through the emergency. And as Sri Lanka has done well on the health side, and hopefully we can maintain that, then I think let us get through that. Let us get through the emergency and come on the other side of that. And the central bank and the banking sector needs to make sure that the maximum possible is done to support the economy, to support livelihoods that Dr. Noel spoke about in a sustainable way for the sector. And then I think once we get through it, as I said, once we get through this immediate emergency, we need to get onto the structural reforms as fast as possible. And the financial sector reforms will be an important part of that. On green finance, as you know, in Sri Lanka, the central bank has had a bit of a head start. They are part of the Green Finance Initiative. They worked very closely with the IFC. As you know, the Senior Deputy Governor, Dr. Nandalal Veerasinghe, has been leading this work. So that Green Finance Initiative, from what I can remember, was making some headway. And the banks have been responsive. I think a number of the banks actually have taken green financing seriously. And in terms of tapping into global and regional funds for green finance, maybe that is something we need to look at more carefully. That's pretty much it, right? That's what you want.
Yeah, thank you, Dr. Indrajit. Over to you, Samantha.
Okay, great. Thank you very much, Dinesh, and good afternoon, good morning to everyone. I'm honored to have been invited to moderate this distinguished panel. For me, it's striking that it's taken a global pandemic to remind us how important resilience is. We've heard some very insightful views from all the panelists on building resiliency in the financial system. And over the next half hour or so, we'll be diving further into some of these issues to shed further light on how countries and businesses are navigating through these challenging times. the so-called paradigm shift brought about by COVID-19. So resilience in the financial system is imperative to weather the storms in this era of disruption. And without further ado, let's just dive straight back into the discussion. I'd like to bring in Mr. Rolf Berndt into the discussion right now to get a regional perspective. So given the current COVID-19 crisis, are there opportunities for regional arrangements or regional solutions on how to best manage the vulnerabilities and to promote financial stability as the region becomes more integrated in terms of trade and investment flows? If I could,
Okay, can you hear me? Am I off mute? Yes, okay.
Yes.
I don't really see a lot of, again, I come back to what I said previously, I don't see a lot of regional integration in South Asia. For me, if I look at Sri Lanka, its hope is really more expanding. It's rebuilding its tradition, its export markets, actually building on new markets. There's probably more chances there than really trying to regional great integration. It is important. I think that more needs to be done, but the region has lots of trade barriers which would need to be brought down. And that's perhaps in a nutshell.
Okay,
if you want to challenge me on something else.
Thanks for that. I'd like to move now to the private sector focus. Clearly, building a resilient financial system is not just a task for the official banking sector. The private sector also has a very key role to play. The important partnership between the government and the private sector remains a key element in ensuring stability and sustainable economic progress, particularly in this time of crisis. Effective engagement between policymakers and the industry, both within and across borders, has never been more crucial. Mr. Toshan Tamana, as Senior Partner McKinsey India, I'm sure you have some interesting views on private sector engagement. Do you think there's been sufficient engagement and commitment from the private sector in creating greater awareness of financial stability issues?
Yeah, thanks, Samantha. I think given the pace of change, I think it is fair to say that both the government, the regulators, and the private sector spent the first part, I would say March, April, May, just coping up. I think too much change was happening too fast. And the private sector was just coping up how to make sure that the work survives. Okay? Because if you take the financial sector, the banks and all, I think for years we had a certain way of working. The regulators had put in, for example, when an account had to be opened, the KYC norms had to be followed in a certain way. You had to come to the branch and so on. And suddenly you could no longer do that. Okay? Similarly, in treasuries around the world, you had a dealing room which was considered to be very secure, all conversations recorded and so on. And suddenly you had the living room become the trading room because people were sort of trading from anywhere else. And in these times, issues like confidentiality, how do you maintain that when people are staying in a certain place, you have three others and you have to still continue your work? And hence, it created the need for both the regulators to be a lot more enabling. We suddenly saw a whole barrage of, I think Dr. Kumaraswamy mentioned, enabling regulations. There were a lot of things which were so far considered to be not right or regulators had concerns happen, and the private sector, by the way, also had a necessity for it because otherwise operations could not continue. I think to me that was the step one of how the engagement happened. Now it's changing because now the private sector is really asking what's next, and the regulators are also asking a similar question. And I think there is a dialogue where, for example, work as a concept or office as a concept is being questioned. Supply chains are again being completely changed globally, and I don't think there is an option for private sector and the regulators to engage. And most importantly, from a resiliency standpoint, some of the threats to the private sector in financial services are not in the country itself. So, for example, cyber attacks. Most of them are cross-border, anonymous, and banks are the #1 target. So how can the regulators create that framework? Because many of the times the mandate itself is not there. You have to extend across a single sector to be able to have that dialogue. And so I just think we are going to see a lot of interesting engagements, and innovation and stability have to go hand in hand. You cannot just focus on stability, because then you will not innovate to the new paradigm shift. And if it is only stability, then we will actually not take the advantage of the opportunities that the pandemic is providing.
Right, thank you. That was very interesting. Clearly, this crisis has brought to light the fact that we need a more prudent risk approach on the part of the private sector. I'd now like to bring Dr. Kumarasamy back into the discussion. And we're focusing now on some of the new non-financial risks to the financial system. In your tenure as the central bank governor of Sri Lanka, you identified fintechs, along with electronic payments and fund transfer systems, as the pillars of modern banking development, and highlighted some noteworthy initiatives covering new technology, payment products, consumer protection, and system stability. With new players and innovative products entering the banking sector, we're witnessing unprecedented change and at an accelerated pace. There are also new non-bank players in the fintech space who are competing to grab an increasing share of the banking value chain. In your view, and given the current disruption in the sector with the COVID crisis, how do you think Sri Lanka's banks are responding to this changing dynamic? And are banks likely to manage defensively, or do you think some banks are really ready to step up and be shapers of the future?
Thank you, Samantha. Let me kind of step back a little bit and say that you know, even before the COVID crisis, there was a significant amount of progress made in terms of opening up this space. The central bank set up two committees, one on fintech, one on blockchain, which is now reported, and those recommendations are being rolled out. You know, there is, I think, a regulatory sandbox now must be in place in the 7 months I was away. I'm sure that's now in place. There is, I think, a proof of concept on a blockchain-based KYC process that is being worked on. In terms of the attitude of the banks, I think they would probably tell us that they were chafing at the bit, that they wanted to go faster than we were allowing them to go. Because again, this is a balancing act. Clearly, one has to embrace technological change and create the incentives and facilitate the banking sector to be competitive and to move forward in this space. But having said that, as a regulator, you have to balance it out with the stability of the system. And we had another really pressing problem in the sense that the Sri Lankan financial sector has a lot of bricks and mortar. You know, the branch-based banking system is very extensive. We have too many banks, we have too many finance companies, lots of branches. Now, if you jump very quickly into some of the new fintech solutions, you need to then make sure that you don't go so fast that the traditional banking sector gets undermined. This is the balance that you have to strike, because you must think that there are a lot of deposits in these institutions. If they get undermined by going too fast and they're not able to compete and they're not able to gear themselves up to function effectively in this space, there can be a lot of disruption. So the pace, it has to happen. The regulator has to facilitate it, but the regulator also has to determine the pace at which this change can take place in such a way that there isn't major disruption in the sector. So that is really been the challenge, and the central bank is, I think, now moving forward. In fact, I think they declared 2020 as the year for digital transformation. So the signpost is clear as to what direction we are going in. And some banks are going faster than others. And I think the COVID situation probably has given a lot of momentum to this. And the regulator has to keep pace. But the regulator has to, A, make sure that the system doesn't get undermined, that old bricks and mortar branch-based system, which is now in obsolescence, but it's not obsolete. So moving from obsolescent to obsolete has to take place in a smooth way. And that's that the regulator has to do. And finally, of course, the whole kind of confidentiality and security. The central bank regulates the payments and settlement system, and it's responsible for not only maintaining its stability, but also for maintaining confidentiality. So all those are the factors that are in play. But I think, if I'm not mistaken, the central bank has clearly signposted where it wants to go. Now it's a question of going there as stably and as smoothly as possible.
Great. Thank you for that. Bankable, as the CEO of one of Sri Lanka's largest foreign banks, it would be great to hear your perspective on this. Is Standard Chartered positioned as a shaper of the future, or during this very challenging time, are you simply managing defensively to get through these difficult moments?
Yeah, Samantha, thanks. We never waste a good crisis. The way we see this is like, this is a really good opportunity for the banks and for the corporates to change the way we work, like I explained before. Coming back to the Sri Lanka situation, I think most of the local banks and the global banks, of course, got, digital apps, mobile apps, connectivity is there. During the crisis, we saw the digital penetration went up. So in terms of thinking, we are definitely there. Coming down to my own bank, like 90% of my corporates would, use digital payments. So 90+% now. My affluent segment, these are not the millennials, Gen Z, these are baby boomers and Gen X. 70% of that population is now digital. Think about it. So things have definitely changed. But going into the next level, like open banking, we created this sandbox environment, we call for bids. We've not seen real action because then COVID happened, unfortunately. Yes, there's work happening, Dr. Kumaraswamy, in the blockchain space. I think there's work happening to do a digital KYC. So all these bits and pieces are there. I think there are a couple of things that we need at this point. So one thing we need to figure out as a country, what do we need? Because we are a different country compared to, I also worked in Africa at that point. At some point, I remember when M-Pesa came, there was a huge unbanked population in Africa. So M-Pesa took off because of that. You come down to Sri Lanka, 70% of the population got a bank account. Now that's a good problem. So if 70% got bank accounts, what we have to do is do the value-added services through the fintechs. Partner with fintechs, you go into a mobile app, you do everything through a mobile app. Your travel, to your doctor consultation, to your fees, to everything. And then you go into one mobile app, you access, 2-3 bank accounts. So that's the missing, piece, I think, in Sri Lanka. So the open banking piece is definitely missing. But one more thing, Dr. Kumar, you want to say something? Okay. Yeah, so I think what is important as a country, we need to figure out what do we need. One, there are critical success factors. So one is we need one digital payment platform for all the government payments. Right now, we do different integrations to connect with different government entities. We need one platform for government payment. It's very, very critical. Then we need a national identity card, like I explained before. So then we need the bureau to be connected with the banks. Those 2-3 things will change the world for the banking industry. I'm sure the local banks and the global banks, the whole industry is ready to change. It's just that we still don't see the banks coming together like in the UK, setting up consortiums and partnering and moving forward. What we see is different banks work differently on different things, and so as a result, we all have different mobile apps, different QR codes. So that's a bit complicated in Sri Lanka, unfortunately. So if you can all come together, finally we have one QR, Lanka QR is now going live, it's live actually. All the banks are joining now. So what we need is that, the cohesive approach and working together in terms of an end destination. Yeah, thinking is definitely there.
Right, thank you, Bankable. Dr. Kadaru, if I could bring you into the discussion at this point. We've seen a huge paradigm shift in the payment sphere. For example, the move to mobile-based applications like e-money and QR code-based payments. Where is Mauritius at in terms of finding the means to embrace some of these developments and their potential usage while maintaining financial stability and resilience?
Yeah, thank you, Samantha. So essentially, the experience of Mauritius, what I hear is, from what I hear, it has been very much similar to that of Sri Lanka. We already have a regulatory sandbox that has been in operation for the last 2 years. The central bank here is also going for a central KYC exercise. So you were talking about mobile apps. Actually, yes, these have been actually growing at faster pace, I must say, with the crisis, because people have been using more and more digital transactions in spite of an aging population. That's also interesting. And I think what is important, though, from a financial stability perspective is because these fintechs, they can be disruptive. So there is a critical role for the regulator. You know, how are we going to maintain the balance between ensuring innovation and preservation of financial stability of the existing architecture? And I understand more and more attention has been lately given to the concept of financial conduct, you know. So how you price, you know, how do you behave in the market? So I think that's become more important with fintech recently.
Thank you. That was very insightful. Mr. Santosh Kumar, I'd like to draw you into the discussion now. Once again on operational resilience. Operational and business resilience in particular is becoming increasingly important. And this is often harder to deal with than things like capital and liquidity buffers because they involve challenges that permeate the entire organization. This pandemic is unprecedented and as you know, businesses and individuals have had to adapt to changes very fast, brought to work and life in general. What did this mean for employees and customers? And most importantly, what steps has Mastercard taken to improve governance of operational resiliency risks?
Thank you, Samantha. It's a very good question. So I'll respond on 3 terms. One is for employees of Mastercard. Second is for our customers. When we say customers, they are our banking partners, merchants, government, all the people in the payment ecosystem. And the third, what we have done in the community. So Mastercard is present in more than 205 countries across the globe. So for us, safety and security of the employees is extremely, extremely important. So the moment the pandemic started, we moved to a work from home concept where we will provide all the essentials to operate very smoothly. And in office, we have something called a Operation Command Center, which looks after the operations and ensures performance resilience. And we divided the pandemic in 4 phases: containment, stabilization, normalization, and growth. And around the world, currently, we are moving from stabilization to normalization. So this is with respect to the employees. With respect to our customers, we came out with, and during COVID, there is a lot of innovation that happens, and we saw a lot of shift in customers moving to the digital platform. So we encouraged them, and guided them, all the merchants and our bank customers, to get into digital solutions. Like we have something called Mastercard Payment Gateway Services, which provides e-coms, which is brand agnostic. We have got something called Mastercard Send, where businesses can do seamless fund transfers. We recently had introduced something called Simplify Commerce in Sri Lanka, where merchants today, because of social distancing, a lot of people are not visiting the outlets and shops. So merchants can create a portal for themselves at a very economical fees, and they can sell their products. So that's something that we did. In India, we came with an innovative product called Soft POS, where a normal POS terminal is very expensive. So this is on a smartphone. We devised a POS where any merchant can accept cards on a smartphone. So that's again making it simpler for the merchants. And we have seen that today merchants have understood the need to get into the digital space, and we are providing all support. We're getting support from the government, from the banks, from the regulators, and we are ensuring that merchants get into the digital space and are able to transact digitally. The third is from a community point of view. We understand that a lot of people around the world have got impacted. MSMEs, farmers, other people have got impacted. And as employees of Mastercard, a lot of them have, during this 4-5 months, have done voluntary services, have worked with various NGOs, have worked with various community, in various community programs to help people who have been impacted on their own accord. I mean, it was very all voluntary, and that's how we've been supporting the society. That's it, Samantha.
Okay, great. Thank you for that. If I could turn now to Dr. Noel Targo and Mr. Manuel Jayasinghe. From an education standpoint, how is this digital disruption driving radical transformation of the finance function? And how is finance being reinvented for the digital world? It would be interesting to hear your perspective on this.
So I'd go, and then Manuel kind of respond. So let me speak from a broader range, because before my current job as a professor at Nottingham University, I used to head education globally for AICPA-CIMA, so responsible for the training of professional accountants, probably 650,000 of them across the world. And we have been banging on the need for digitization and for accounting to move into that digitization space very quickly. Because if you look at what accountants are doing, it's really very simple. We are collating data, most of the time cleaning the data, contextualizing the data, connecting the data in order to produce some information. And then we are analyzing the information to provide insight. And then we are communicating that information to various people and using that as a focal point to interact with the rest of the business in order to support decision-making, mostly real-time, and also then after decision-making to provide the mechanisms, resource allocation, etc., performance management framework for the decisions to be implemented to achieve an impact. So we are moving from information to insight, through influence into impact. Now, digitization allows us to be able to do that really very quickly. It also allows us to bring into play all kinds of data that we did not used to have. You see, accounting restricted itself to financial numbers and to financial numbers that organizations could collect cheaply. Some numbers we couldn't collect, but now we have all manner of data that we can collect: structured data, unstructured data, etc. You can go into look at customer sentiment on mobile platforms and so on. And we are trying to bring that together and be able to tell the stories that organizations need to tell much better. So in terms of our reporting, for example, the finance function has reported mainly in a descriptive manner. Just say, this is what has happened. Now there are at least 3 levels at which we can report. We can report diagnostically to say, this is why it is happening, because we have enough data to be able to start looking at both correlation and causality. Then we can move into predictive analytics to say, because of what has happened and why it's happened, we think this is what is going to happen in the future. And we can draw out different types of scenarios with different probabilities of occurrence. And so we give flexibility to decision makers. And then we can report prescriptively. And so in terms of prescriptive reporting, we're saying, this is what has happened, that's why it's happened, this is what we think is going to happen. So this is how we should position ourselves in response to that. And that is where we should go. Let me just conclude that bit. I could go on and on, but let me conclude that bit and talk about two main things. The other thing is that finance has been used to control it. And controlling, we have a defensive form of controlling rather than an enabling form of controlling. And the new paradigm for me is for finance to enable through control. And this is how I describe it. Think about a car. You know, when you think about a car, you have the accelerator and the brake. Most people think of the brake as stopping the car and not allowing the car to move forward. That's not a function of the brake at all. because I ask you this question: which car would you drive fast? A car with an excellent braking system, or a car with a faulty braking system? Certainly, you drive a car with an excellent braking system faster than you drive a car with a faulty braking system. So the brake actually is to enable you to speed rather than to stop you. Because you know, once you can see what's happening in the horizon and the reaction time is fast, the brake would enable you to do that. And that is what digitization and the possibility of collecting information and analyzing them and deriving insights can make you do. So in my own personal consulting, I've consulted for big organizations in insurance and aviation industry, where we've used control system to establish a framework that allowed them people to innovate and go much faster than the organization would otherwise have gone. And those are the kind of things that we think that finance should be able to bring to the table. The final thing I'll say is that there's been a lot of talk about technology. Now, this is what one of, in the previous research that I did for SEMA, when I was there, the CEO of Oracle, a lady called Safra Khat, said to me, she said that, Noel, when people think about digitization, most of them think about the technology. Often the technology is not a problem, it's the sociology that's the problem. And what she meant was the use and the cultural and mindset changes that must go for people to use these things. I mean, people my age have used their smartphones, 10% of the functionality of smartphones. And it's not, we've got to be able to learn how to combine the technology with the sociology, different ways of doing things like that. So for example, now that we have new working systems at home, how do you ensure that there is performance management issues are addressed, motivational issues are addressed, team building issues are addressed within that particular kind of space, and some of the things that have been mentioned. So that's where I think accountants should and finance people should move in terms of our mindset and in terms of our use of technology. But that's where we are.
Okay, thank you for that. I'm conscious of the time, so I'd just like to ask a couple more questions. If I could shift the focus onto climate change. Now, COVID-19 holds profound lessons that can help us address climate change if we make greater economic and environmental resiliency core to our planning for the recovery ahead. So I'd like to draw upon you, Mr. Rolf Berndt, as Regional Manager for South Asia. Could you elaborate on some of the key initiatives that IFC is working on to make South Asia's economies more resilient to climate extremes?
Okay, thank you. So that's a question where I can answer a bit longer, but I'll still make it short because of time. So this is a major topic for IFC. It is of key importance because we see that change in the economies to make them more climate resilient is also good business. IFC has led the Sustainable Banking Network, has introduced it into Sri Lanka. We've partnered this one with the central bank, and we've these Sustainable Finance Roadmap launched by the Central Bank of Sri Lanka was supported by IFC. At the firm level, we've done a number of credit lines through banks. We've helped the banks really to engage in financing enterprises. In the real sector, we've worked on energy efficiency initiatives, and we're advisors to the government of Sri Lanka on a large renewable park in the country that would add a large chunk, almost 380 megawatts of wind and solar power to the country. We've done risk sharing facilities to help on wind power. With one of our less known is we've also developed the EDGE certification, or how to make new buildings really climate smart or really energy efficient. So it's really how to produce really renewable energy, how to really help enterprise become energy more efficient by changing things, how to help buildings become energy efficient, how to help also the banking network overall become and adapt really climate change. So mouthful, but I can go on for another half an hour, but let me stop there, provide space for others.
Great, thanks for that. Just to wrap up, I'd like a 30-second comment from each one of you. So what, in your view, is the biggest constraint to achieving greater financial resiliency? Start with you, Dr. Kumarasamy, just in 30 seconds or less. The biggest constraint.
Yeah, our biggest constraint, I guess, is clearly we need, in the absence of a vaccine or effective and efficacious therapeutics, clearly that is the biggest uncertainty. But let me very quickly, I think that we've been talking about the new normal. What is in the new normal? One, digitalization. Two, the whole ESG agenda, not just climate change, but also people are much more concerned now about inequality, about diversity. How is the financial sector going to respond to those issues? Because there's a lot of pressure coming up. And the third thing is, we're going to have a less globalized, more local, more regional world. And that's going to result in reconfiguring of supply chains. And I think businesses will now trade off efficiency and cost effectiveness for resilience in their supply chains. And that actually, I think, will make quite significant changes, lead to significant changes. So the financial system, the financial institutions need to be geared up to support their customers to deal with these three key, I think these are the three key elements of the new normal. There'll be others, but these are three elements, which I think the financial institutions need to be geared up to support their customers.
Thank you. Dr. Ave, comments from you?
Yeah,
the biggest constraint to the to achieving resilience.
My point could be very much different from what I talked, during this webinar. But the issue, to me, right, biggest issue is that although liquidity issue is not that problem with many countries for the time being, however, issue is that how to channel such a liquidity to those needed, such a channel, money to coming to those needed people or entity to receive on time quickly. That kind of thing that I'm seeing, the one of the biggest issues present right now. So through, for example, through the better and comprehensive, credit guarantee schemes to SMEs. Right? Such a thing needed to be revisited. The credit guarantee scheme has been one of the most popular and traditional ways to channel, right, smoothly the capital to the MSMEs. But under the present situation, such a thing we may need to revisit. And such a credit guarantee scheme could be also, the work with the green finance, based on the green industrialization policy, something like that. Such approach may be needed now. Sorry, my point is a bit different from what I told you earlier. Okay, but I'm talking based on my background, because I'm background is very.
Right, thank you. Bingamal, 30 seconds.
Yeah, Samantha, stick to 30 seconds. So I'll tell you what has worked in the emerging market that we have seen. So it's also even opposite of that is a constraint. So if you see a proper fiscal policy aligned to the monetary policy, to marry the two, it's a success story. I think that's critical. Fiscal policy, monetary policy understanding, what's to be done, then putting money behind it and moving that money to the real economy. I think that's a success story that we've seen across economies. And then the banking sector working closely with the regulators, real-time reporting, understanding the clients. So not having that kind of close relationship, following orders very quickly, responding to the economies have created issues in some of the markets. But Sri Lanka, I mean, to qualify the statement, saying that we've done really well during the pandemic as a country, the banking sector and the regulators. Yeah.
Thank you. Mr. Santosh Kumar.
Samantha, quick one. So again, like Bingu said, I would say it's constraint from a payment industry point of view. We are looking at the world going digital, going cashless, and anything that is a hindrance to it, or like we feel lack of awareness, training for the stakeholders, some kind of support from the players in the ecosystem is all that is required. So it's in the interest of everybody. It's the interest of government, interest of the merchant partners, bankers, payment networks, fintechs, everybody, that we should all go digital and move to a cashless society.
Thank you. Mr. Jaisinghe?
Yeah, sorry.
or Mr. Toshan?
Education front end.
Would someone else like to step in?
On the digital front, I think you have to run fast, and not that it was not been me. There was prior to this pandemic, there was digitalization taking place, but this pandemic has actually accelerated it. But just to take something from Dr. Noel Tago, yeah, we must accelerate, but we must also have to have the brakes as well, because this brings about a lot of other challenges which needs to be addressed also. Otherwise, you probably might have a calamity coming in the future.
Okay, thank you. Mr. Toshan?
Two things from my standpoint are the biggest barriers. I think first is a lot of the risks are actually outside the financial system, and that threatens its stability. It's even the current one, the crisis is not financial. It went to the financial from the physical crisis that we had. Similarly, cyber attacks. I think the Q1 of 2020, every minute we had 375 cyber attacks, not just on banking, but overall. So that is number one. And number two is fractured regulation. I think each country will have to is deciding for itself. Even within a country, you have capital markets, banking, insurance, foreign capital. So as we think of, the biggest risk is some of the risk could fall between the cracks of fractured governance and regulation.
Great, thanks for that. Mr. Rolf Bent?
So I have brought my crystal ball along to find out what is the biggest constraint. It's not working today, but I think the biggest constraint is really, can we globally find the populations to have the patience to accept the measures as we go forward? And I think that would be my biggest wish, actually, that we find the courage actually to accept the new normality.
Thanks for that. And a few final words from you, Dr. Kadaru.
Yes, thank you, Samantha. So I think a very important must is to restore investor confidence, because the world economy has been badly hit. The morale of business people also is not very much up. And I think even a vaccine will not just bring a cure to the world economy overnight for a couple of months. And I think very importantly, and lastly, structural policies that I mentioned earlier. There's been a lot of emphasis on demand management policies, but we need to start thinking about structural policies and talk about productivity more, actually.
Great, thanks. And final 30 seconds to you, Dr. Tabo.
For me, basically, it's just our ability to be able to understand what is happening much faster. So I say again, see sooner, act faster, and not stay behind the curve. So let's bring all the brain power that there is to be able to, both on the medical side and also on the policy side, see what is happening sooner and be able to act faster, whichever direction it takes us.
Great, thanks. Thanks for this very insightful discussion. So ultimately our goal is to strengthen our collective ability to anticipate and respond effectively to developments that affect financial stability, not just in these challenging times, but through what will likely be an extended period of global adjustments going forward. With that, I'd like to hand back the floor to Dinesh and Mr. Arun.
Right. Thank you, Samantha. Thank you very much. I looked at a lot of the questions that we have received in the last 10 to 15 minutes, and I put one question together for the entire panel to close this session. So I'm going to give you 1 to 2 minutes max to answer this question. And the question is, what will the new normal sound and look like for business once the crisis is over? So can I start with Manil?
I think there's going to be a lot of shifts in the economies. Many people said that there may be the global supply chain is going to get impacted. So there's going to be a lot of shifts. There's going to be more focus on IT, telecoms, various places like that. So the new normal is going to be a lot of shifts. It will embrace a lot of IT related stuff. Things like fintech and things like that will start to increase in a tremendous pace. I think from an economic front, there has to be also a lot of support structures that has to be given, because for example, in Sri Lanka, bulk of our economy is the SME sector, and though we say about the private sector, I think at least in Sri Lanka, it's the SME and the government or the SOEs also dominate our economy. So those also needs to be focused on in policy framework, and I hope that we can get some sort of a balance between regulations and the developing of the economy, because this is critical for us to move forward, not to over-regulate, but at the same time not to necessarily allow anything to happen type of thing. So with that, I think if we can get those equations right, the new normal will not be a challenge. It's a question of quickly identifying what those emerging industries are and focusing on them and giving the necessary support for those to develop.
Thank you, Mani. Binguma looks very worried, so maybe I'll shift to him.
Yeah, so just one sec, Dinesh. Yeah, so one thing is, Dinesh, we'll never go back to the old days. The whole supply chain is disrupted. I think we spoke a lot about that. We believe that the agile companies will survive the new normal. We've done research around, how companies are responding to the crisis and how they're looking at post-crisis, and we believe that agile companies will survive. The other thing that we see is there's a regression of the global economy. So you will see more and more capabilities, local buying, local manufacturing kicking in. So that will be another trend. So for a country like Sri Lanka, the other thing is, for clients are moving out of markets like China. There's a big China de-risking happening. So with things like that, we see a huge opportunity for a country like Sri Lanka.
Thank you. Dr. Jamil?
Thank you, Dinesh. So
you can wear your Deloitte set for this.
Thank you. So I think when new normal will essentially consist of more cautious producers, businessmen, as well as consumers, there will be more risk awareness before decisions are made, and maybe factors that didn't used to be factored while in making decisions will now be factored in. And also, I think there will be more policy collaboration between advanced and emerging countries when it comes to policy tools and policy measures.
Thank you. Rolf?
Again, so holding up my crystal ball,
yeah.
What does the future show? It still doesn't show anything. No, I think I could only agree with what I've heard. So there would be lots of digitalization. I'm not quite sure that the regionalization will be the case. I hope that tourism returns, but it will take time. And I'm convinced that in 12 months, there should be a vaccine which will allow the world to at least somehow go forward.
Thank you. Santosh?
Dinesh, on businesses, I feel a lot of focus post the COVID will be on innovation, on training, on investments, on fraud and risk. And if I speak just for the payment industry, there'll be a lot of shift and focus by all the stakeholders. That includes the regulator, the banks, the merchants, the fintechs, towards moving to the digital world. Getting into e-com space, getting into contactless, those kind of stuff. So there'll be a lot of change in the way people will transact from a payment industry point of view.
Okay. Dr. Noel, a lot was said about doing new things. How do you prevent banks and all going back to the old ways of doing things?
I'm not sure they have any option of going back to the old ways. If they go back to the old ways, they are gone. Because people have been used to doing contactless transactions at the moment, and that is where it should head to, particularly because it is convenient for customers, and then it also allows data to be collected in such a way that there will be personalization for customers. But may I say also that for me, one of the new normal which holds promises, particularly for developing countries, is digitization and new work practices. I don't need to get a visa to the United States or Canada or to the UK in order to work for a UK company. And therefore, we should begin to start thinking about what I call virtual immigration, where talented people are there. We were already moving towards that in the open talent economy, and this should accelerate. This should also mean that people can work for themselves and not necessarily for organizations. So the amount of talent on an organization's balance sheet can reduce, and will give flexibility and release entrepreneurial spirit of people within developing countries. Thank you.
Thank you, Dr. Noel. Toshan, what do we need to do differently to be ready to get ready for the next crisis that we need to face?
I'm hoping Rolf's crystal ball will not show anything, at least on the next new crisis. So, but I think we need to just make sure that there is creative disruption. We are changing the ways which we no longer need to keep, and I think it's almost like crisis has been the mother of invention for us. And we do that. I think, secondly, I do think we learn the whole new social contract established. I think the role of governments, the role of corporations, the fact that, the talent in the new normal. And I just think if we understand the new social contract, it's a delicate balance between completely capitalistic and socialistic structure. I think that's going to be what is going to keep us ready for hand. This crisis will come. It will always be unknown unknowns that hit us, and that's what I think we need to be ready for.
Okay, Toshan, one quick question before I ask Dr. Indrajit to wrap up. What impact has this had on talent in general?
I think there has been two kinds of impact on talent. I think there is, as you saw in the US, for example, or many other countries, a lot of bankruptcies have happened. People have large employers have filed for bankruptcy, and it has created definitely a lot of stress and uncertainty. Okay? That's number one. And people who have been in jobs for 25, 30 years are suddenly finding a blank tomorrow, which I think is one thing. Secondly, what it has also done is it has, as Nicholas Taleb had written in Anti-Fragile, it has put a whole set of people saying, I can actually work from home. I can actually do a whole host of new things, and the gig economy, who would have thought that physical fitness trainers suddenly went online and started their own stuff. So I do think a new set of talent, new set of roles has also been created. I just think we need to have the confidence to continue on that path, and we will have employment which will become so diverse that we will even forget some of the earlier ways.
Okay. Dr. Indrajit, over to you. Can you give us one powerful takeaway from this session? Because given that there are a lot of students who are listening in and a lot of professionals listening in. Yeah, muted.
So I think what has been encouraging is that all the panelists, while they've recognized the tremendous damage the pandemic has caused to lives, to businesses, to economies as a whole, there is also an underlying optimism that we can build better going forward. And that's what we need to do. And as I said earlier, as far as at a global level, kind of three elements of a new normal would be digitalization, ESG, and disruption of supply chains and creation of new supply chains. But for my own country, I'm going to say something which is we've said for decades, but it has to be considered a new normal because we've never been able to achieve this. We've talked about it, but never achieved it. So I'm going to call this as what should be the new normal. And the new normal is, as Dr. Jamil said, to have a stable framework for monetary and fiscal policy that actually delivers sound macroeconomic fundamentals, which fosters confidence amongst investors, amongst creditors, rating agencies. And also on structural reforms, we do what we've talked about for decades. I must tell you that in the 80s, I used to work for the finance minister at the time, Mr. Dimel. And what I ended up saying while I was in the central bank was exactly the same things he said in the 80s. Okay, so what were those things? Which I hope will now be the new normal in actual fact, is structural reforms on factor markets, on the investment climate, on investment promotion, on trade policy, on trade facilitation, on education, training, and skills development, your area. You have been writing and talking about this for years, but we've made remarkably little progress. So I hope the new normal, as I said, will be policies that give us sound macro fundamentals and structural reforms that increase the productivity and competitiveness of the economy, create higher value jobs so that Sri Lankans can graduate to those jobs and have greater productivity, and that we educate and train them so that they're able to do those. That I hope will be the new normal for Sri Lanka.
Just one quick question. What do we need to do differently to build leadership in our country in order to face this future crisis?
Well, I personally feel that there is remarkably little accountability in our system. I'm sure I have done lots of things wrong. And I don't think I've been held accountable probably for those. And others have probably done even bigger things which were wrong. So we have, if people make mistakes, on an industrial scale, we have to find a way of holding them accountable. And also, I don't think it's enough for us to put all the blame on politicians. It's, the responsibility is in all our hands to make sure that the right things are done and the right policies are done. We blame politicians. I work for the Commonwealth and I've been to many countries, many Commonwealth countries. I don't think our politicians are any more venal than politicians in other parts of the country. But what is different is that every institution in our country has been politicized. That is what is different in Sri Lanka. That is what all of us have allowed to happen. In other countries, the different institutions have some degree of greater degree of independence. By that I mean like the judiciary, the press, the public service, all that has a degree of independence which is greater than in our system. And it is because of that we have this issue of accountability. So that's my plea, that we all get together. Our politicians are essential. They are the elected representatives of the people, and the people's sovereignty is vested in them. But we also need strong institutions which give us checks and balances through the system. And because we allowed that to be eroded, that is why we started second to Japan on most socioeconomic indicators in Asia at the time of independence. We have fallen quite a long way down the pecking order now. So I think these are some of the more fundamental issues we need to address.
Thank you. Dr. Masato, you can have the final word.
Sorry, but Dinesh, one thing. I must say, I must again say this. I'm not pointing my finger at any particular political party or group. I think there's a collective responsibility for everybody in politics, all Sri Lankans. We have allowed this to happen. Okay, thank you.
Thank you. Okay, Dr. Masato, if you can have the last word.
Thank you, Danish, for inviting me.
You can also refer to Japan also if you like.
Yeah, you see, yeah, but I'm not that, the big typical Japanese, no longer, Yeah, but okay. Anyway, I can share the 3 points. Even under the present situation, after we, solving out this coronavirus, pandemic outbreak, right? The nature of human beings is a die hard, So we tend to return back to our way, by, the nature, okay, as a human being. We want to socialize, we want to talk, in person, something like that, right? So, the some part, we return back to the old way. But at the same time, present situation like e-commerce, digitalization, that kind of thing might bring to the necessary new skills, set of skills or knowledge. And it might impact to the companies, the country, and also employment, labor, there's the the kind of making some new level of the inequality, different type of the the inequality in the future. And the third point is that such a the change, right, might bring to the new way of the competitive advantage, which the kind of attribute to the each country. Such a new competitive advantage might be taken, aimed. For example, the Sri Lanka, focusing on some industrial sector or skill set and knowledge, so that the Sri Lanka, after the this pandemic, right, moving to the some the new start, really the leading to the the world and the society. Thank you.
Thank you, Dr. Masato. So I'll close the session and hand over to Arun. A big thank you on behalf of ICC. We appreciate very much your support and the participation in this event. And a big thank you to Samantha as well for moderating this session. Over to you, Arun.
So we've had some incisive, even clinical analyses of the situation as it exists, and also what is foreseen. We have also had some wishful thinking, maybe, and it is hoped that there is an opportunity to carry on thinking, and in the particular circumstances that each of our viewers and participants who are in their various capacities, you have an opportunity to perhaps rationalize some of the many remarks that have been made and see how it can be applied in your own circumstances. And since there was also the value placed on adjustment rather than harking back and looking back to the times past, we just have to deal with what comes, which is unknown. Of course, there are some which are constants and some things which are going to be surprises. And one of the big worries, I think, in the minds of many, and Dr. Kumaraswamy also brought that up, one never knows with the political flavors that are ahead for this particular country and even some other countries, one never knows which way the winds will blow, and that also will impact on it. But on that note, we must close, but we have to say thank you very much. Already our panel has been thanked by Dinesh, but we also want to say thanks to our sponsor, Empower Capital. We deeply appreciate the support that has been provided, and to all of those that have been listening in and tuned in, as it were, through the Facebook Live. Well, thank you very much. And we trust that this has been useful and some food for thought has been presented. So all the very best to all, and do take care.
Thank you. Thank you.